Good afternoon, everyone. Myself, Tejas Vaiti, on behalf of Kirin Advisors. It's a pleasure to welcome you all to Beyond the Numbers Value Discovery Summit 2025, powered by Value Educator and co-powered by Kirin Advisors. Today marks day two of our three-day summit with a series of focused management meetings lined up. We proceed to the fourth interaction of the day with Dhruv Consultancy Limited. From the management team, we have with us Mr. Pandurang Dandavate, Chairman of the company. Good afternoon. Welcome, sir. We also
Good
have Ms. Varangi Moye from Team Value Educator. Good afternoon. Welcome.
Hello, good afternoon.
With that, now I hand over the floor to Swarangi. Over to you.
Thank you for the quick introduction. So before we begin, let's start with the company overview. Dhruv Consultancy Services Limited, incorporated in year 2003, is a project management and engineering consultancy focused on delivering specialized solutions for India's infrastructure sector. The company works largely with government agencies through tender-based projects and provides services across highways, bridges, tunnels, ports, and urban infrastructure. Its capabilities span the full project lifecycle from feasibility studies and detailed project reports to engineering designs, construction supervision, OEM support, audits, and structural assessments. With her comprehensive technical skill set and experience across multiple infrastructure verticals, Dhruv Consultancy continues to play a key role in supporting large public sector. With that, I hand over to Mr. Pandurang, sir. Over to you, sir.
afternoon, everyone. I am Pandurang Dandavate, founder, chairman, and director of Dhruv Consultancy Services Limited. I will brief about the company. We, as a family business, started this company somewhere in 2003. I was before that executive engineer, PWD, Government of Maharashtra, served last 5 years in MSRDC and was instrumental in completion of 16 flyovers in Mumbai, and also start of toll on Mumbai-Pune Expressway and Mumbai entry point. I took the voluntary retirement from the services and started the company. Initial 10 years, the company was working in a private sector as an associate or in a small government assignments. After 10 years of completion and after 10 crore of turnover achievement, company got qualified or empaneled with a few works in Ministry of Road Transport and Highways, Delhi. And that happened in 2013-14. And you all are aware that from 2014-15 onwards, the boom started in infrastructure, particularly in highway sector with Modi 1 era. And we ride on that wave, and we started bidding with central government agencies like MORTH and NHA. Initially, we were getting qualified for 2-lane, 3-lane road works, and dominantly we were working in Maharashtra for a period of 3 to 4 years. Today, we are pan-India company working in 28 states of India and union territories, and also working abroad with the successful completion of DPR in Mozambique for World Bank aided project. And also we are shortlisted or almost winning the few assignments in Ghana. So journey started in 2014-15. We have the three verticals of our services or business. One is preparation of DPR, that is project report. Second is supervision of works, which is carried out by the contractors or concessionary. And third is supervision of operation and maintenance works after completion of project. Fourth small vertical is there, which is in a private sector as a safety consultant, as a proof consultant, as a design consultant also we are working. So again, going back to the journey 2015-16, we got few DPR works. In 16-17-18, we got few supervision works. In 18-19, we also got some 4-lane works. And from 2020 onwards, 2020 onwards, we started getting the works in NHA, which is a esteemed organization. And now our main client or dominant client is National Highway Authority of India. who are responsible for construction of expressways, missing links, iconic structures, industrial corridors, economic corridors. So we have underbuilt 8 expressway assignments out of 12 in India. That is what progress as far as qualification and you can say eligibility of a company. In 2016-17, we started facing heat of the cash flows because of excessive orders, and we decided to go for listing. We got ourselves listed on BSE SME platform in 2018, and in 2021 we migrated to main board on BSE, and as well as we got listed on NSE also. So in between COVID came, so little bit hit was there for the business growth, but we immediately recovered the growth, this negative, you can say, growth factor of COVID, and now we have crossed 3-digit top line this last financial year. As far as listing is concerned, you can say funding is concerned, initially we raised funds of 23 crore at the time of IPO. Later on, we raised 10 crore in 2022 by way of warrants issued to promoter and promoter group. And also last year we raised 33 crore by ref issue, which was badly needed for closing few loans and also buying the state-of-art equipments and working capital requirement mainly for the bank guarantee margins. So now the vision for the company is that we are aiming to add few more works from the international market, which have the good profitability and margins. You all are aware that Honorable Prime Minister of India has put a goal to have a 5 trillion economy by 2028 or 2029. And 2 days back, Honorable Chief Minister of Maharashtra, Sri Devendraji Fadnavis, also announced that Maharashtra will also achieve a 1 trillion economy mark in same period. Now, to have a GDP increase, expert says that if you put 100 rupees in infrastructure, then your GDP grows by 250 rupees, 2.5 times. So another 3 to 4 years, sky is the limit for infrastructure sector, contractors, concessionary and consultants. And we are flooded with the works today. We have unexecuted our total order book of 600 crore, out of which unexecuted is about 300 crore. And we have submitted bids to the extent of 1,000 crore in last 3-4 months. And our success rate is roughly 25%. So this is all from my side as a company chairman. Thank you, Kirin Advisors and all the organizers of the webinar for giving us opportunity to present the company.
Thank you so much, Pantalan sir. So participants, the floor is now open for Q&A. You can raise your hand or drop your questions in the chat box. So we have a question in the chat box. If EBITDA margin pressure is very marginal, why did Q2 margin fall to 11% while H1 is 14%? What exactly changes in Q3, Q4 to lift margins back up?
We are not supposed to make any forward statement as far as Q3, Q4 are concerned. But traditionally, if you see the history of any construction firm, contracting firm, consultancy firm, we are weak in the monsoon period because of our infrastructure works are mainly affected due to the heavy rains. Since we are working in 28 states of India, so geographical challenges are there for progress of the works. That is reason one. Reason two for little bit lower on Q2 is that we had some issue with our joint venture partner who was working as a lead partner in one of the Tamil Nadu project, and it was understanding that he will put all his team, he will put all the bank guarantees, and we will be the silent partner in that project, because he had supported us in a lot of other projects, because joint venture is need of the hour. And in that project 2-3 years back, Unfortunately, some mishap happened, basically in wrong approvals to the drawings and designs. And NHI has took action on as a joint venture. They took the action of debarment on 11th of March 2025. And we were banned from taking the parts in few of the bids of NHI North. And immediately we were sufferer without any fault of us. We approached to Honorable High Court Madras, and we got a stay order for that debarment order issued by the NHI, and our order flow started smoothly from mid of the July, and it is smooth till date. So that 3.5, 4 months effect of debarment has impacted a little bit on negatively on Q2.
Thank you for answering that, sir. Next question is, what margin should we treat as a sustainable base?
See, our submission of the bids are not based on the L1. That is, financially we need not be L1. The beauty of our business is you have to score the more marks. You have to be H1 to win the assignment, mainly the government assignments. So what is H1? Highest technical score, technical plus financial score. 80% weightage is given to the technical bids submitted by us, and 20% weightage is given to the financial bids. So initially, when we started working with North or NHI, we were scoring somewhere in 85, 87, 88 marks out of 100. Now we are scoring 95 plus marks in technical submission. For layman, I will explain 1 mark carries a additional profitability of 50 lakh rupees. So day by day, our technical strength is increasing. And since technical score is increasing, we are now submitting our bids at high EBITDA and high profitability margins in the domestic market. In international market, the first assignment we got from the Mozambique, wherein we had submitted the bids with a profitability of 40%. And now we are at mid of the assignment, and we are aiming to have a 70% profitability for the reason that dollar is becoming stronger. So what I can say that we have reached to such a level that now EBIT should increase year on year substantially because of these two reasons. One is more technical score, and second is more bids in the international market having high profitability.
Thank you, sir. Next question is, are election-related delays a one-time issue, or do they structurally affect order awards every election cycle?
Basically, dominant effect is since we have the main client NHI North, that is the Government of India departments. Dominant effect is there for the central elections, which was there in 2024. So May 2024, there were elections. So before that, 5 to 6 months before that, our cash flow, our inflow, our order book was little bit on slow side. But it happens traditionally every 5 years since we have the dominant orders from the Government of India. Previously, we were also affecting from the Government of Maharashtra elections, but now our Government of Maharashtra portfolio is very, very low.
Yes, sir. Next question is, with a 200 crore unexecuted order book over 2.5 to 3 years, what is the realistic annual revenue run rate from the existing book?
As I already explained, we are not supposed to make forward statements, but unexecuted order book of not 200, it is 300 crore to be completed in 2 to 3 years, part A. Part B, we have submitted bids to the extent of 1,000 crore, and our success rate is about 25%. So additional 250 crore new orders are expected in another 6 to 8 months. So unexecuted order book should double in a period of 1 year. Automatically, it will have a good impact on the top lines of the company. Third important thing, we have submitted few bids for wayside amenity business again from Government of India agency, that is National Highway Logistic Company Limited, which is the 100% subsidiary of NHI. And therein, first time we are entering as a developer with small investments. And once that results are expected to be out in January or February next year, we have submitted 9 bids, and we are hopeful of winning at least 3 to 4 bids. Once that bids are won, then top line will change like anything, because service sector has a limited growth of 15-20% every year. But this wayside amenity business will have sky is the limit for growth.
Thank you, sir. Next question is, of the 250 crore bids outstanding, how much is expected to be decided within FY26 versus later?
You can say turnover time is about 5 to 6 months. So it is a continuous process. So 5 to 6 months back, we submitted the bids, they are getting opened, and we are getting it converted into order book. So typically, I can say 50% of the submitted bids should be converted into order book in a period of another 4 to 5 months.
Thank you, sir. Next question is, management mentioned 70 to 80 crore minimum order inflow by Q4. Is this already reflected in the current bid pipeline, or does it assume fresh tenders?
No, it is already reflected in our order book, unexecuted order book, because our debarment was prior to that, after that, and prior to debarment order, all the work orders were converted, all the bids, letter of acceptance were converted into orders. Over and above that, we have also started working in a private sector, which has no impact of any government orders. And we are getting a good response from the private market, basically lending the equipments, design or structural audits of the bridges.
Okay, thank you. Next question is the stay order temporary or until final disposal of the case? What is the worst case downside if the stay is lifted?
Stay is not going to be lifted for simple reason that there is another forum for appeal, which our managing director, my daughter Tanvi, had a one-to-one meeting with Chairman NHI 2 months back, and they gave us a silent hearing, and they also accepted that Dhruv was unnecessarily punished because of that debarment order, and they have requested us to, or directed, suggested us to make a appeal to NHI authority, which is separate from the present administration team. And we have made appeal to that committee, and committee meeting is expected somewhere in January. And in that committee, we have given representation for total withdrawal of the debarment order. So at base route, we are trying to resolve that issue. Secondly, from that date of meeting with Chairman NHI is not pursuing the case in the High Court Madras, and the case is getting adjourned. Already 1 year, 10 months are getting over, and debarment either period may be reduced to 6 months or it may be totally squashed. So practically, with my experience, I can say that there is no impact now on that debarment. Worst scenario is only that it will be interim stay till end of the debarment period.
Thank you, sir. Next is, how much revenue historically came from NHAI before the debarment? This helps assess dependency risk.
Initially, we had 60% of the orders from NHI, but post debarment, during the debarment period, we were free to bid with other clients. We aggressively put our bids in international market, private sector, and of course that both the sectors, they are giving high profitability than government assignments. So today we have a reduced order book of about 40%, which is existing one only with NHI. And we are trying to widen the client base, like we have added now the SIDCO also in our client list, Panvel Municipal Corporation in our client list, which are very near to our office. Then we have entered into airport sector with first assignment we won from the Nagpur. And also we have submitted the bids for ropeways for government and private, both the sectors. So dependency on NHI, we are planning to reduce not immediately, but month on month.
Thank you, sir. Next question is, does the 8.73 crore Karnataka NHAI award fully confirm normal eligibility, or is it just project-specific approval?
It is a normal eligibility, and since I already explained that since there is a interim stay given by the Madras High Court, now our portal, company's portal, credential portal that is on Intracon, it is open. And once the Intracon portal is open, then consultants or companies can bid anywhere with any government department. So this is purely on a merit basis. We have won the Karnataka assignment, having zero impact on the department.
Next question is, the Nagpur Airport consultancy is 1.63 crore. How long before aviation meaningfully contributes to revenue? Aviation.
See, this is only the first assignment. As you might be aware that this NDA government or Modi 3 government, they have planned to have airports, 250 plus airports in tier 3 cities of India. Every month they are opening one airport. So huge opportunities are there in airport sector for DPR, for supervision of the works. And we have just entered into that, you can say, business. And we are hoping to get more and more assignments with in joint venture with foreign groups.
Thank you, sir. Next is, for 10 to 15 crore airport consultancy bids, how many can be executed simultaneously without straining manpower?
See, for DPR works, manpower is not much needed. The manpower needed is mainly on the sites. For the DPR works, all the work except the topo survey, all the work is in head office, which is based on the softwares and equipments and designs. So presently, the opportunities in airport sector are mainly DPR. So we don't have any challenge for executing the work, but we have the challenge for eligibility. We are not getting eligible for major assignments or medium size, even medium size assignments. So we have made joint ventures with European and American firms, and we have started submitting the bids in joint venture with them. And we are hopeful of getting more and more works in another 1 year.
Thank you, sir. Next question is, the mention of rupees 150 crore ticket size, are these consultancy only projects or EPC linked advisory roles?
Basically, dominant order book is consultancy in a government sector. Hardly 7 to 8 crore orders are rupee orders are for the advisory services to EPC contractors.
Yes, sir. Next question is, international win rate is 1% today. What specific changes will realistically push it to 5 to 10% within FY26?
Turnabout time in international consultancy market, particularly World Bank funded and ADB funded projects, is very, very slow. Bids we are now winning or losing, they are submitted 3 years or 2.5 years back. So you can understand how slow they are. Secondly, our submissions are mainly in African developing countries, wherein political instability sometimes further hit the progress. Like Mozambique, we got the bid 1 year back, but execution started 6 months back because there was a change in the government. So in international market, we have submitted bids to the extent of 150 plus in terms of number. 15 to 16 countries, African plus Asian developing countries. And now this submission is 1 year back. So another 6 months to 1 year, we will start getting results of that. And as far as success rate is concerned in international market, hardly there are 7 to 8 bids are opened, and we have got one, and we are successful in second. So it is very difficult today to judge the scale of the order book from the international market. But good thing is that technically we are getting qualified, number one. We are scoring good marks, number two. And third, competition is on lower side. But since we are working in unknown geographical conditions, we are submitting our bids with minimum 40% profitability or EBITDA.
Thank you, sir. Next question is, how do delays in government approvals or land acquisition impact billing cycles and working capital?
Our dominant orders are, as on today, dominant orders are for supervision of works, wherein construction contractor or concessionaire is already in place. And all that issues of land acquisition, utility shifting, forest clearance, etc., is addressed at the time of DPR only. So today we are not facing any challenge of delay due to land acquisition for our payment. Yes, challenges are there at the time of completion of the project, but there is a provision of PCOD, provisional completion certificate, in the HAM projects, even in from the EPC contracts. So practically, it is not affecting on our payments. Yes, at the time of DPR, it has an impact, but we are also part of preparing the land acquisition proposals, and our payments in the DPR are based on the milestones only. So in DPR, it has an effect, but our DPR portfolio today is only 15 to 20%.
So next question is, what percentage of projects are milestone based versus time based billing, and how does this affect cash flow predictability?
As already explained, DPRs are milestone based payments, which is 15 to 20%. Private sector, normally we take mobilization advance, so there is no impact. Then international market, the payments are smooth. In supervision, billing cycle is 60 to 90 days. So overall consultancy, if you ask me, present order book, we have comfortable cash flows.
Debtor days rising to 100 days. What is the management's target range going forward?
So debtors mainly, again, it depends on government and mainly the GST acts, because 30 days is our service period, and then 30 days are required to submit and pass the bill, and another 15 days considering holidays. And now in Maharashtra, there are few elections. So government officers again focus their you can say attention for 15-20 days. So average 75 days billing cycle comes considering all the clients, and debtors basically are mainly that only. Secondly, the DPR. The DPR 15% or sometimes 10% retention is there, which we get at the time of completion of the project, wherein we can't do anything.
Yes, sir. Next question is, with around 450 employees, what is the current revenue per employee? How much improvement is expected from BIM and digital tools?
There are two parts of the employments. One part is on the site supervision. So nothing will help. Physical presence of the person, engineer is required on the site. So 70% of our staff is related to the sites. So there is no possibility of any curtailment because of the softwares or because of AI. As far as supervision of the works is concerned, there is no method as on date in Word to supervise the works through AI. So that is the main. Yes, definitely impact will be there in the head office staff, head office design team, or head office monitoring team, but that impact is very small.
Next is, are margins materially different across highways, urban infras, bridges, and airport consultancy segments?
Our margins are, as I explained, in government sectors, our margins are limited because of competitiveness of the bidding or transparency in the bidding process. In a private sector, we have the best margins. And in international market, we are submitting the bids with greater profitability. So our strike rate is very low. But whether we get 1 or 2 or 3 works in international markets, that is adding to the profits. And as I already explained in my opening remarks, that technical score plays very important role as far as margins in the government sector are concerned. And now this year we have reached to the maturity level of 95 marks. And year on year, we should now increase our margins marginally in the domestic government sector.
Okay, sir. Next question is the 1,000 crore order book vision by 2030. What CAGR in order inflow does this imply from today's base?
Today, already we have submitted bids to the extent of 1,000 crore, and as I already explained, our strike rate we are expecting 21 is last year 21%. This year we are expecting 25% strike rate. So every year we have planned to submit 1,000 crore bids, minimum 1,000 crore bids till 2030 or till we achieve the 5 trillion economy. Besides this,